I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending July the 26th. This week the cattle futures really collapsed hard and really turned this market that's been resilient over here for the last all calendar year, and especially through the spring really, as we expected it to drop further and faster, but it's really turned it into a bearish situation. June live cattle futures dropped all week and ended up ending the week at 148.40. August feeder cattle futures dropped hard, dropped $4.50 there on Thursday, ended the week at 217.25, and that's a whopping $8.50 drop from Monday's close, because on the heels of that cattle on feed report, Monday was actually quite a bit higher, but then dropped $8.50 to end the week. But this big collapse for these cattle feeders has really been twofold, because first they lost that big basis that they were working with that was helping them achieve break-evens there, or get close to them anyway. First they lost that, and then they lost all the market position, and so now these closeouts are really down to the dumps, and then they're losing a lot of money on these cattle that are going out on the show list right now. And that just goes to show you that these packers have, they got their heads together, and it's a lot easier to get a handful of heads together than it is a whole industry and a bunch of guys that are out there competing for feedlot replacements. But these packers just got together and they just cramped this slaughter rates through June. June was the month that normally you see the heaviest harvest rates, but not this year. They just really turned the nozzle down and made it tough on everybody, and on these end users too. They were able to prop up the box beef cutout values. They were able to buy fed cattle cheaper and really got things going their way. But now they say these packers are running around and trying to get their captive supplies a lot heavier for the fourth quarter, because they feed cattle too, and they're cattle feeding subsidiaries, and they're having a hard time finding the green yearlings, the high performing green yearlings that everybody wants, rather than try to go out there and buy those and compete against all these independent feeders for those. They can just go out and get captive supply for later on in the year and make it a lot easier, and they are giving a bonus to what the board is trading at for that. But those out months in the board really dropped hard too. They were up over 156 there for December, and now down 152. But there's a lot of heavy traffic out in the major grazing areas, these cattle feeders and commission buyers and guys running around the country trying to get some of these green yearlings coming off grass late in the summer and in the early fall there. Those are the best cattle to feed. Nothing tastes as good to cattle except for those ones coming off that green grass. Most of them are just getting Rumensin blocks or some mineral, and when they get to that feed, it tastes good. Those cattle are fully grown and they're ready to put the weight on, and nothing performs like a green yearling when you put them in the feedlot. But the country trades and the major high volume sale barns in the southern plains were mostly steady this week, kind of steady firm early in the week, and then kind of a little bit weaker towards the end of the week after the board fell so hard. But now we're starting to see some of those Midwestern yearling summer specials come, and in those places, especially in the northern plains, those cattle are selling sharply higher. St. Joe Stockyards this week had kind of a yearling special there. They sold 2 loads of steers weighing 752 for $2.50 a pound. That's a $33 premium to where the board ended up this week. And they're good black cattle, but put together cattle. They weren't all from the same farm starting out or anything. And then 136 of the heifers off the deal weighed 743 at $230.25. Still a big premium for a heifer. And that's what the board's based on, is a 750 pound steer. It's selling those in the ring at a $33 premium to the spot board, which is really crazy. Look at Cattle Market Central there. You see some heavier yearlings they sold at St. Joe there. 120 head weighed 880 at $220.25, and that's a nice price there. Calf market was lower this week for the most part, $2 to $5 lower across the southern plains, and then most of your sale barns in the lower Midwest. And it's just because of the heat, and we're starting to get into the eve of a holiday week, and the holiday is going to land on a Saturday this week, so it's really going to mess up 2 weeks, next coming week and then the week following, because a lot of these shippers, especially in the southeast, are going to be worried about getting enough cattle to move, and it's really going to kill 2 weeks there, because not going to have enough calves to really sink their teeth into, and scared of what they might have. But there are going to be some yearling specials coming up around the 4th, and then right after the 4th you have your big Superior video, and we'll know what those yearlings are worth by the time that's over. Fat cattle market this week, $1 to $2 lower. They started trading on Wednesday and then continued Thursday and Friday. 148 to 149 in the north is back to a premium now, with 149 in the northern plains and 148 in Kansas and the few that Texas sold. Dress trade was steady to $3 lower, from 237 to 240, and that 240 really wasn't around late in the week. It was on Wednesday morning, but it faded out. 237 to 238 for the most part at the end of the week. But that pretty much wraps up your cattle market summary. Check out DV Auction on the 3rd, July the 3rd. Joplin's going to have a video that's powered and broadcasted on DV Auction. Get on there and check out what those summer yearlings are going to bring. You can also see this report and more information on the StockExchangeNews.com. So from my home office here in Maysville, Missouri, we'll talk to you next week.